Good morning. Guess what? It's Wednesday morning again, and we're back to Breakfast with Bev. So, welcome so much for joining us this morning. And I am Bev Curtis here at Bev and Company at House of Brokers Realty Inc. And we always have a lot of fun on Wednesday mornings because we talk about real estate related topics. And hopefully, the information that we provide you can find very beneficial in your own situation or share with others that might be looking to seek a real estate transaction. So with that being said, this morning we're at a very fun place. We are at Providence Bank South, which is right behind the Walgreens location off of Nifong and Forum. So I think everybody knows where that is. And so I have the pleasure this morning to be with two delightful loan officers, Ian Chang and Laura Brownfield.
Thank you, Bev.
Good morning, guys. So why don't you take the lead, Ian, and introduce yourself for us. Tell us a little bit about yourself.
My name is Ian Chang. I am a mortgage banker with Providence Bank. And this is Laura Brownfield.
Laura Brownfield with Providence Bank. I've been doing real estate lending for, 18 years or so.
A long time.
A long time.
Yes.
You've
been
for
in
having
this for a
us.
long time. You're quite welcome. Well, so this morning, guys, is our part 3 series on investment properties. So we started out a couple weeks ago, and we had Jeff Radel that joined us with House of Brokers, and he is kind of the investment many years with investment properties and kind of share his knowledge and expertise as far as the different types of investment properties and just a little ins and outs with them. Our second week into the series was with Nathan Jones, who is an attorney with the Jones Law Office, and he provided his insight and input as far as the legal aspect of rental or investment properties, talking about should you keep them in your personal name, should you have an LLC, what does it mean as far as tax ramifications, what does that look like as far as a trust and how you bundle and roll that in together, and all the legal ins and outs, which I think was very beneficial as well. So our third kind of leg of this is actually the financial aspect because, okay, somehow we have to have the cash to acquire these properties, and how do we go about that and what does that look like? So this morning we're talking about, okay, we have our personal primary homes that people live in, and then it's like if they want to take another step further in real estate, they might want to actually invest in real estate property to either turn a profit in the short term, long term, add to their portfolio, whatever the case might be. So, excuse me, Ian, tell us from the aspect of what is the difference between really an investment property and my primary property? How does that look from the financial side?
I mean, there's a lot of similarities, but yeah, there's also there's a few differences as well. So, from the outset, it's similar to a primary residence in that we'll meet with borrowers, we'll get an application generated, evaluate credit scores, credit history, assets and income, that sort of a thing. Where investment properties financing starts to change is when you look at the down payment requirement for an investment property, and then there's also generally reserve funds are required based savings and that sort. And we'll get into that a little bit later in the discussion. So that's where you really start to see the difference.
Okay, so let's talk about then, Laura, if you could shed some light. What does the down payment look like? Because on your personal primary home, there's all sorts of varying options, VA, FHA, low money down. But investment properties is a little bit different dynamic. So could you kind of shed some light on that?
Yes. So Bev, you need at least 15% down to purchase a single family investment property. If you're looking at purchasing a 2 to 4 unit, then you would require 25% down. When you compare the pricing though, you really it's best to put 20%, even 25% down, but you do need to put down payments. They don't have the high loan to value loans on investment properties.
So the old days of just knowing it was a flat 20%, there is an option for 15% these days.
Yes, there is.
Okay, that's awesome because I think a lot of people think that it's at least 20%
on a single family.
On a single family,
yes.
Okay,
yes.
Okay. So what does that look like then, Ian, like from the terms? Because most people put their personal homes, not all, but a lot of times we'll put them on a 30-year mortgage just because it makes the ease of the monthly payments and kind of the, okay, I'd rather make the monthly payment as low as I can, and I can always add to that if something happens in life. So how does that work on an investment property?
It's very similar. I mean, a 30-year fixed is going to be the preferable loan product in that,
Okay.
for that property. You also strike a better balance there with, a lower monthly payment. So any sort of rent that you're charging, that's going to fit in there. It's going to, make it a wise investment. There are 15-year products that are available for
Okay.
investment property. There's even ARMs, not very popular though. You don't see a lot of ARMs being written for investment properties. You really want to look at that 30-year fixed for the
Because
investment.
is it still true that, like, if you're doing it in your personal name, you can have up to 10 properties on a fixed rate? Is that correct?
It depends on the investor.
Okay.
Sometimes we have one investor that allows 5 properties financed for an individual,
Okay.
always including their primary. There are investors that have up to 10.
Okay. So that's
it
still out
depends.
there.
Yeah.
Okay. So what if an investor said, okay, I've got a manufactured home and I'd like to have like manufactured homes. Can you do those for investment properties?
No.
Cannot.
We're both no.
Okay.
No.
Okay.
Now, that's for secondary market. So Providence Bank, we have portfolio funds. So if it makes sense, then sometimes we can do a customized arm or a balloon maybe on
Okay.
that manufactured home. Nothing is a complete no
Sure.
on portfolio lending, but generally speaking, no, if you want that long-term fixed rate.
Okay.
Manufactured.
Maybe on an
For
arm or
investment.
something like that. Who knows?
Correct.
So let's kind of go back to, Ian, you tipped on the word reserves.
Yeah.
So what exactly kind of reserves does one need, or what do you kind of expect? Because, when you own rental property, there's always going to be some repairs probably that comes about. There's going to be probably some vacancies that comes about. It may take a little bit longer to lease than what you anticipated. So from a lender standpoint, what do you kind of sum up as the adequate amount of reserves?
Basically reserves, it's like a safety net, really. And for exactly what you mentioned, for those repairs that come up, new roof, new water heater, that sort of a thing. If it's taking a while to get a new tenant in, that's why we want to for reserves. And reserves are, savings accounts, a 401k that you have, terms of withdrawal if you have access to that money. And we'll evaluate, whether you have access to it or not, or, if it's, if it falls under that reserve requirement. Typically, we would like to see about 6 months PITI, or 6 months payments. Okay. Sometimes, depending on different property types, will require up to 8 months or even 12 months. But generally, 6 months is baseline for reserves.
So if I had, let's say, 10 properties in my portfolio or 5 properties in my portfolio, I would need 6 months per property. Is that right? It's how do you sum up the reserve part? Like if I've got 1 versus I've got 5, 10, 15 properties, how do you kind of mesh that part out?
It's 6 months for the subject property and then 2 months for each property after that. And that's just one requirement from one of our investors. So as Providence Bank, we have several different investors that we can shop that for you. Mm-hmm. So we would document through your accounts and reserves to see how much savings you have built up to make sure that you have adequate reserves for all of your properties.
Okay. So it's not 6 months per property, because I was going to say that would be a chunk.
That's a lot of reserves.
Yeah. A lot of reserves. It would take
2
a long
months for
time
each
to get to
property.
that point.
Yeah.
So then let's look at another aspect of this. So a single family, my primary home, is a credit score rating in order to get the best rate. But typically interest rates on investment properties are a tad bit higher. What does the credit score have to look like for one that wants to start into the investment side of things?
Generally, I say 640 on everything. But when you're looking at investment property and when you're looking at a conventional loan, your credit score heavily determines your interest rate. So the higher the score, the better interest rate you'll receive. And on investment property, that credit score difference can make a big difference in your interest rate.
Oh, I'm sure.
So when we pull your credit, if there's a way to get you to that next level, we can run a credit analyzer and try to improve your credit score quickly. I've got a gal that just went under contract over the weekend. We got her credit score up 100 points in 2 months.
Oh my gosh.
So she's under contract and we're closing next month. So
that is
those credit analyzers are
exciting.
good. And particularly on investment property, if you can get a 20, 30, 40 point bump in your score and just wait 30 to 60 days, it's going to make a big difference in dollars over the life of your loan.
And do you guys kind of help people then as far as
Absolutely.
analyzing their credit and what they can do to
Absolutely.
boost that score?
Yes.
Absolutely. Yeah.
Yes.
Okay,
And
that's
if it's not
priceless.
really obvious, we can just run a credit analyzer. And this particular customer, it was pretty much a mess, but she had a settlement coming and had some medical, and I really just handed her the entire thing, and she called me back and said, I did everything, can you run my credit? And sure enough,
Oh, I
100
bet
point
she was
improvement.
ready to give you one big fat hug. That's
Wow.
awesome. 100 points, that's
Yeah, it
huge
was-
on a credit score.
Yes.
Okay.
It's nice when they listen and really take heed to what you're
Yeah.
saying. So
Well, and
it
I think you
works.
find out very quickly who's serious about wanting to improve their
Exactly.
situation and who's not. Talk
exactly.
is cheap, so it's like you have to do the little
That's
follow through
right.
and get where you're wanting to go. So, okay, so Ian, we kind of talked a little bit about the max amount that you can own that's fixed rate.
Mhm.
So, and I think that you said some investors were up to 10.
That's right.
So, and if I'm understanding this correctly, that's kind of like in your personal names. When does it kind of shift over to the commercial side of things?
When you look at a multi-unit property,
Okay.
like basically more than 4 units,
Okay.
for an investment property, it's basically 1 to 4.
Okay.
And if you're buying in an LLC, you need to go through the commercial side of the bank.
Okay.
On 1 to 4, on secondary market, we're doing loans for individuals.
Uh-huh.
But if you have acquired enough and you're buying properties in partnerships or corporations, it needs to go to the commercial side.
Okay.
So yeah, we can connect you with one of our commercial bankers.
Okay. So what happens if somebody owns their home that they're in now, and let's say they want to move up to a larger home, they've got a growing family, and they're like, you know what, I think the home that I'm in, I'd like to keep as a rental property. I think it would be, you know, it would rent well, it's in a good location, good schools, wherever the situation might be. Is there anything that that person has to do differently if they qualify to keep that rental property? Because if it's on a fixed rate, they get to keep the fixed rate. They get to keep everything, the rate, the insurance, everything, and they could just step up into another property so long as their financial situation warrants that, correct?
Yes, but it gets a little bit tricky sometimes if underwriters are saying, okay, you have a home and you're buying a second home in the same community. What are your intentions with that home? So we have to analyze that a little bit, make sure that they can afford both homes. Have they been a landlord before? Do they have those reserves? And then we take it on a case-by-case basis.
Okay,
Yeah.
but it's certainly possible
Absolutely.
to do.
It's worth
It
the
seems like it's
conversation.
done a lot. It
Mhm.
seems like in our town anyway, especially being
And
a.
it depends on what
college
type
town.
of loan they have on their current residence as well.
Mhm.
Do they have a City of Columbia second on there because they're required to live in that home? So it's
That's a
worth-
very good point. That's correct.
Yes.
Yes.
So it depends on, it's, you know, let's just have the conversation.
Sure, and see what all the possible.
Absolutely.
And that's why, guys, having a really good relationship with a lender, that if you are going to get into the investment game or you are already in it, I think people that are already in it understand the value. You need a really good title person that can run those searches for you to know exactly if it's got clear title and if there's any clouds. You need a really good attorney to help you kind of analyze everything, make certain you got it all packaged correctly. You need a really good accountant to make certain that you're, you know, taking advantage of all the tax situations and the liabilities that come along with that. But then also a really good lender, because it's one of those things where if you see a really good property, probably most other people are going to see it as a really good property. And you need to be able to pick up the phone, contact the lender, run the scenario, have all your stuff set up with them and ready to go so that you can pull the trigger. So I can't tell you how many times Alan and I will be out, you know, and looking as like, okay, I found one. You need to hurry up, run by, and take a look at this. And,
And my goal is to have you ready before you're going
Yes.
out.
Yes.
Because,
That's the
what
key.
if I'm on an appointment? What if I am unavailable for a couple hours, but there are
That's right.
multiple offers coming in? So I always tell people, if you're thinking about buying 1 year to 2 years, come in now. Let's get you
Mhm.
qualified. Let's see if there's some credit improvements. But let's have you ready so that when you call, you already have a pre-approval letter in hand.
That's right.
And I can just tweak it and send an updated letter over to you. It's much easier than trying to
Yeah.
get hold of me right then and
Absolutely.
scrambling for all those documents.
Yeah, because typically if it's something really good, everyone else sees it as being really good too. So
Exactly.
yeah. So are there other than just homes? There's all sorts of things that people can invest in. So I'm sure at Providence Bank, you do the gamut of it all. Because I mean, there would be, everything from, condos to duplexes to triplexes, fourplexes, apartment buildings, all sorts of things. So I'm sure you see a little bit of everything that comes through from the investment side.
Oh yeah, absolutely. Yeah, and I mean everything from what you mentioned, what are commonly known as kiddie condos, where parents will invest in a condo so their kid can live and go to school here, and then rent it out after the kid graduates. And then all the way up to those duplexes and fourplexes. We're definitely interested in loading.
Yeah.
And we've done some non-conforming condos. As you know, there are a lot of condos in Columbia that don't necessarily qualify for secondary market. But
Exactly.
if the borrower is strong and they have some money down, we have financed those on portfolio.
Well, it sounds like that you guys offer a lot of creativity as far as it really depends on the borrower's situation. It's like if you are financially sound, and it sounds like if it makes sense, then it's certainly something that you guys will strongly consider and
Absolutely. And
certainly
it's
make a good
fast.
attempt.
So we're small enough that we can get loan decisions. I was ready to give up on one deal and talk to a couple management folks, and within 30 minutes, we were doing it.
Oh,
So
my
that's
goodness.
the quick turnaround that we can have. We're small enough. We have the grit of a mortgage company, so to say, but it's really easy to expedite things and get it done. So
That's awesome.
Yes.
So very, very good.
And when
So
it comes to condos, I like to think of it as it's not a question of can we or can't we. It's a question of how are we going to get
I like that.
it. Yeah.
I like that. Nobody likes a fat nose. So it's like, it's how? I like
no
that.
is always hard, no matter what it is.
Yeah.
No is always difficult.
Yeah.
Well, at Providence Bank, we have more ways to say yes.
I
is our
hear
tagline.
that slogan on TV and you're advertising. You have to say, I have to smile every time, because that's a great positive way to,
That's
to say it.
tagline,
That,
yes.
yeah. You have
Good
more
job,
ways
Ian.
to say yes. Yeah. Very good. Very good. Okay. So from your guys' experience then, what else would be noteworthy information for the folks listening in? That would be maybe some tips or some things that's like, okay, don't do that because that will be a nightmare. I mean, what would be some good little tips to share with people as they're seeking out those investment properties or just getting started that would be beneficial? Does anything come to mind that we haven't already discussed?
Oh yeah, definitely. I mean, look at the overall cost. So the overall monthly costs. Are you going to hire a property management company to vet those renters,
That's a
pull
good
credit
point.
scores, or are you going to do that yourself?
Mhm.
That's just a cost of doing business there. Who's going to take care of lawn care, or are you going to handle that? I mean, really try to look at the big picture
Mhm.
and make a decision as to whether this is going to be something that's right for you. Because I mean, not everybody is cut out to be a landlord.
Nobody wants that 2 a.m. appointment, call
Right.
in the middle of the night
Exactly.
saying, okay.
And find the
my house is
experts. I mean,
out, or-
talk to the realtors that have investment property that are experienced in it and get,
Yeah.
you might think you know what the budget is, but let's talk real numbers
Yeah.
from someone that's been there and does it.
Yes, because it can be an eye-opening experience if you own several properties and you've got several mishaps, something goes out on several properties all at the same time. And Murphy's Law is it will happen. It comes in threes. I'm telling you, it comes in threes. If something goes wrong here, expect 2 more phone calls from somewhere else, because it just seems like that's
Right.
just the way it goes. But
Hailstorms.
Oh boy, now that's a whole other topic, Ian, because I have to say, but every time it hails, that's the first thing that I think of is, oh God, you're either praying that it hits the one that, that really needs the new roof, or you're just like, oh gosh, please miss me. I really don't want to go through all that again. So that's a very good point. Yes. Is there anything else that you can think of, Laura?
We're good.
Okay.
Just
All right.
start early. Start the conversation and approvals early.
For sure.
Absolutely.
For sure. Well, and I think it's very apparent that as much as probably people don't want to think of it this way, is your credit score, guys, is huge on everything you do in life. I mean, everything from getting insurance to getting interest rates to, car loans. I mean, people can look at it from employment options. I mean, all sorts of things. So it's like, if you have your financial ducks in a row, it just makes navigating through life that much easier. And there are people right here that are willing to offer their services and give you the help on that. And I have to say, I'm a firm believer in investing in real estate. I know I've been in real estate for a long time now, and it's kind of what I do, but I believe in it so much that I invest in it myself and look at it as a long-term portfolio, for retirement and all of that. Because one of these days, I'm not going to be able to show houses forever as much as I would think I'd like to. But so it is a great way to diversify. Not saying that you don't need to be diversified in other avenues as well. Real estate is just one avenue as far as being, a little bit diversified. And it's something that you have, no matter what happens to the market, you still have a property. And that's kind of the part that I like about it. And there's lots of great, the tax end of it, depreciation, appreciation, all sorts of things that go along with it. But having a good lender to basically hold your hand through the process and give you some good advice is priceless. And at Providence Bank, they have many, many ways to say yes.
Oh, go back.
And so,
Nice.
We're going to
I
hire
gotta
good
get that
marketing
plug
now.
right in there to make sure I say it correctly. So at Providence Bank, they have many ways to say yes. They have an office downtown on Cherry Street. They have the office where I'm at here at the South location, just right
And at
behind.
5th Street, right by the big parking garage.
Yeah.
Location there as well. We're in
Okay.
St. Louis, down to Texas.
Down to Texas and
Jefferson
Dallas. I know
City.
Mr. Rory, he's down in Dallas, so
Yes,
I've
he
talked to him
is.
from time to time.
Yes.
So they're definitely expanding, and they have, lots of options. They do a lot of in-house portfolio loans, and they're just an excellent resource when you're thinking about investment properties or any kind of real estate, purchase in general. So, don't just think of them as investment only. I mean, they do every gamut, even auto loans, you said, in the whole bit. So, so thank you both, Mr.
Thanks for
Ian
having us.
Chang
Thank
and
you,
Ms. Laura
Bev.
Brownfield. We
Appreciate it.
appreciate you guys coming on live with us this morning. We certainly hope that you find the information very beneficial, and feel free to reach out to them on your own if you've got your personal situation that you want to talk to them about, or if you've got something that you want to refinance. And sometimes I've had people that call me that said, I've kind of started out in the rental part, but I'd kind of like to do a do-over. It's just like, after you acquire a few properties, you may kind of find out, maybe I didn't buy the right one. It's not really cash flowing the way I thought. And hey, I've made mistakes along the way too with that, where it's just like, let's sell this one, let's do a redo. So it's like, they're the perfect folks to talk to no matter where you are in the process, either starting, middle, end, wherever you are. Give them a call at Providence Bank. So thank you guys so much for joining in this morning. Hope you have a wonderful week. Go Tigers this weekend, and we will see you next Wednesday morning. Take care.
Thank you.